What is happening, Bulls and Bears? It is almost 10 p.m. Pacific time as I'm recording this. So, this is going to be another late night um, output from this channel here. So, you might be watching this on Friday, March 18th. Why am I putting out a video so late? It's not a good thing to do if you're a YouTuber and you want to get a lot of views. Don't do what I do. You want to put out videos between 3 and 5 p.m., those are the peak hours. The problem is, one, I'm not a morning person, and two, I have a very busy day. So here I am with another late night report. Some very, very concerning things happening in the economy. And actually, the U.S. savings rate for households has dropped to more than a 5-year low. We're going to talk about that in just a minute. But first, on the late night details, don't do what I do again. Here is a report, a recent article, and this is out of Study Finds. For the best sleep, survey finds you should get to bed by 9:39 p.m. Well, I'm already past that, and I'm just now getting this video started. So my sleep obviously is going to be pretty awful if they want me in bed. They wanted me in bed over 20 minutes ago. All right, well, let's talk about the savings rate plunged to more than a 5-year low. Let's take a look at a chart here real quick, and then let's talk about this. And this comes out of FRED, and that stands for Federal Reserve Economic Data. And we're looking at a 5-year savings rate chart here. If we look to the far right, we see as of January, it was 6.4. And just a snapshot of what this is the amount of savings or extra cash that people have after they pay for their expenses. And 6.4% now is the lowest we've seen in over 5 years. All right, so what's the situation? I thought we had an amazing economic recovery. We see during the health crisis here, which came out about 2 years ago now, we saw that the savings rate jumped up very, very high. In fact, it was a multi-decade high. People didn't have to pay rent. Many people didn't have to pay their mortgages. We had a foreclosure moratorium. They were sending out stimulus checks, a lot of stimulus checks. And it's interesting, we see the big bump ups in the savings rate right around the same time as the stimulus checks went out. Here we are 2 years later, and we've nearly doubled the supply of dollars in the economy, but yet now we're the lowest we've seen in over 5 years for this savings rate. So where did all the money go? Where did all the money go? Well, if you said it went up to the top, you guessed right. The top 10% and the top 1% gained more wealth during this time versus any point previously in history. All right, so that tells you where a lot of the money printing goes, and that tells you why the solution, instead of letting bubbles deflate, is always to make the bubbles get bigger. All right, so let's think about this again. Let's paint the big picture on this. We nearly doubled the money supply in the last 2 years, right? We increased the dollars in existence in the past 2 years by 80%. And this is what happens. The average U.S. household now has a lower savings rate, right? Because the cost of living is eating up a lot of the savings that people have. And we're going to watch this number as we progress here into the year, and we're going to continue to see it get lower and lower as wages continue to fail to keep up with the rising cost of living. And yes, as prices continue to rise, home prices, rent, everything is going to continue to rise. Now, speaking of rescue programs, here in LA County, California, they still have the renter protections. So where's the economic recovery? I thought unemployment was so low. Everybody's doing better than ever because the unemployment number is so low is what they're telling us. Why can't they get rid of renter protections and eviction moratoriums? Why can't we stop those in some of these cities that we talk about here, including LA? Let's take a look at this article here. LA County extends eviction protections. And this was announced a couple months ago. But take a look. This is going to be protections in place until the end of 2022. And without this, there would have been an eviction cliff starting on February 1st. An eviction cliff was avoided. All right, again, where is the economic recovery if we still have eviction moratoriums like this. And you think the homeless problem in LA is bad now. Imagine how much worse it would be if it were not for this eviction moratorium. The economy is so strong here in California and LA County that LA County had to cancel property tax late fees for landlords with non-paying tenants. Wait, non-paying tenants? I thought unemployment was ultra low. I thought we had this amazing economic recovery. They told us all the money printing was getting us on a swift, rapid recovery for the economy. Another story here out of the LA area. Carson homeowner unable to move into their new house due to pandemic renter protections. So you buy a house thinking you're going to live in it, but you can't move in because the renter from the previous owner will not get out, and there's nothing you can do about it as the homeowner. So are you actually the homeowner if you can't even move in to the home that you bought? So what's happening in LA and other high-priced cities is just a disaster. Look what's happening up in San Francisco. And I saw one of you down in comments called it San Fran Poopso. That's pretty good. That made me laugh. Thank you for your comments, by the way. I read a lot of your comments. I don't have time to reply to them all, but you guys often make me laugh, and you often give me information. I actually used a lot of the things I read down in the comments on these news updates. So thank you very much for your engagement on this channel. So please let me know what you think down in the comments. Where's the economic recovery? Why does a city like LA have to cancel late fees for property taxes for landlords that can't pay their taxes because their tenants aren't paying? I thought we had an economic recovery. What's going on? Well, what's going on, in my opinion, is the cost of living continues to zoom beyond people's budgets. That's why you see debt continue to climb to all-time high after all-time high after all-time high. But yet what the money printers do to fight inflation is they give us a measly quarter-point rate hike. A quarter-point rate hike. So obviously they're not serious about fighting inflation. They're not even talking about bringing prices down. They're just talking about slowing the rate of inflation down, which is nothing because prices have already risen to painful levels for so many people. We need a crash. We need a correction. We need prices to come down. We need the cost of living to come down to be in alignment with incomes, but they're not allowing that to happen. The bubbles are going to continue to get bigger. People said when the health crisis started to go away, when people got back to work, that the supply chains would open back up again. Well, we've got another crisis now. We've got what's happening over in Europe, and that's causing more supply chain issues as Russia has stopped many exports in a response to the sanctions that have been implemented on that country. So it's going to be more pain at the cash register for lots of items. All right, so please let me know, how does this administration, how do these policymakers go out there and talk about how low the unemployment rate is when we see news reports like the savings rate dropping to more than a 5-year low, when we see news reports about what's happening in cities including LA where they cannot get rid of these renter protections because people are in such dire straits financially. Thanks everybody for being here. Gonna wrap this one up here. We'll talk to you very, very soon. Bye for now, everybody.